Hello guys, it's the Eminence Trader. Now, a new trading week is upon us, and in this video, I'm going to be walking you through my outlook on some major pairs for the week. We will be breaking down key levels, possible scenarios, and where the best opportunity might be in the market. Now, let's head over to the chart and see what the market is telling us.
We're looking at is AUD JPY. Now, if you go to the daily, let me so if you go to the daily, you can clearly see that the market is still on a clear uptrend. Like I say, always clear your charts first. And looking at this now, you can see that it initially filled this FVG, but this is a bigger daily FVG, and now it has created this as a possible inducement for that FVG. So I still believe, I expect the price to come back, probably fill this bearish FVG into the bullish daily FVG. That's the most likely scenario, and it has even tapped into the FVG a little bit. Do you get? It tapped into it and rejected. So if you go to, like, let's see on the 2 hours or so, you can see that. Wait just a minute. Let me go back to the daily. Let me mark that. Let me mark the full FVG. I want to check something. Okay. So the full FVG is marked now on the 4 hours. You can see that if it tapped into that, this was where it tapped into it. So if at all I want to look for possible sales, it should be from here. Then looking at this now, let me go to my 1 hour and see. So now we have this. This was a candle that entered into it, and there's a sweep. So that's, and it swept this low also. So that's a valid CIST. So looking at this now, if at all I want to place a sell here, I'll be placing my sell around here. Then my SL will be below, sorry, above, and I'll be targeting this or this. But basically, you have 3 possible targets here. So let me now zoom in. So the total target is 8. But if I'm targeting just this one, I'll still get my 3R easily. And this looks most likely to happen. It is not an A plus setup, but it is something that is what the risk, based on the fact that it has tapped into that FVG. And you can see the rejection. It looks like it wants to make use of this FVG, but the FVG is too big. The FVG is too big to risk on, because if you are trying to mark the whole FVG like this, your entry will be too big. So you probably be having something like this, and your target will be here, which is still not actually bad. So those are the 2 possible ways. And if you are making use of this, you would have been in the trade now. And this looks like what the market wants to even make use of, basically, because it has filled that FVG, that's tapped into it, and is rejecting. But I expect it to sweep this inducement into that daily FVG. Then we'll see what happens from there. This is a 4-hour setup. Let's see what happens. So it's 2 options. Either it keeps coming down from here, or it comes back to tap into the other block, which looks less likely based on the current market movement. And once it sweeps this, just know that it's sweeping the rest also. Once it eventually sweeps this and it's sweeping the rest, definitely sweeping the rest. So that's just it. So if it gets here first, don't bother, it's not coming back here again once it sweeps this. But it might still go up, probably tap into this and bounce. But then it looks less likely based on what I'm seeing here. The fact that it has filled this FVG a little bit and is targeting this liquidity here. So I think that's that for EUDJPY. You can see how we moved from higher time frame to the lower time frame. Then the next one is AUD So like I always say, let's clear the chart. Let's clear the chart. Then go back to the daily. Remember, majority of the information is usually in the daily. Now we have this. You can see that these pairs, they enjoy filling daily averages a lot. Look at all of this now. This filled this and bounce. It even tapped into the second one briefly, but it didn't really feel it. It filled into this and bounce. Now it filled into this and bounce. So you are getting what I'm saying now. It also filled. Now it has left this one for us. That's why I marked this down. So we have this FVG now. We have this FVG down, which I expect price to come back and fill eventually. So that one is for FVG now. Then the structure, can clearly see that there's a full body close here, which means the market is still kind of on an uptrend on the on the daily time frame. On the daily time frame, the only major key level here is this FVG, and you can also argue that it has an inducement directly above it, because this is like an inducement. So basically, do you get? So we have an inducement for the FVG. So what to do is to look for how to join the market when the market is giving you a sign that it wants to come to fill this FVG here. Then on the 4 hours, you can see something. You can see that it has swept it. Remember what I talked about? Momentum exhaustion. So it has filled that now. Prior to that, it had this and came to fill this and bounce. Do you get it? Created this level now. So this is one possible level that one can actually buy from. But then it is not something I will take because this did not close with the full body. If it had closed with the full body, then I would have been buying. I'll have been trying to buy from here. Do you understand? But it did not close with a full body and it's clearly rejecting. So what do? You go to your lower time frame and see how you can join towards this level. Then you go to your 1 hour. What do we have on the 1 hour? You can see failure swing. Dum, 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 dum. So normally that is where you would have sold from. And now it looks like the market is reacting from it, but then it's not something that I would normally take though. Not something I would normally take because I expect it to at least come back towards this level based on what I'm saying. I look at the multiple rejection. It clearly signifies that the buyers are tired. You can clearly see. It signifies that the buyers are tired. And what it means is that the market is most likely continuing to sell. It's giving a sell bias, basically a sell bias. So if at all, I want to now say, okay, let me look for possible sell entries. Then I'll be looking at this. I'll be looking at this. And looking at the rules of mitigation, you can clearly see that most of this has been mitigated. This has been mitigated. So normally, if at all I wanted to even place this order, this is what I would have used. This is what I would have used, and I would have probably targeted here. So remember, it's just an outlook to see possible scenarios. So if at all I wanted to sell, actually, this was where I would have sold from. So that I would have sold from, and the trade is already running how many hours? 4.6 hours. Do you get? So that is where I would have normally sold from. And now we have this. We have this also. And we've seen it tap into a bullish order block on the 30 minutes. It just tapped into it. Or has it not? Okay, it has not. So we might eventually see a situation where it might temporarily buy from here. It has tapped into it now. Might get a situation where it might temporarily buy from here. Probably back towards this level here. Because this is where the moves are currently happening. But once it breaks here, just know that it's coming for this level. So there's nothing going to happen around here. But this is not a setup I will take. This is not a setup I will take. This is the one I would have taken because it's aligned with the momentum exhaustion. Like the bulls are already tired. These are bearish signs. Do you get? This is a bearish sign. And I would have entered here and probably targeted it, like I said, or this. Because I'll have gotten I'll have easily gotten my 4 hour around here. So this is where I would have targeted. And I'll have been out of the trade. But currently, I'm not going to be looking for anything now because it's quite complicated. This might hold and it might not. It is now a case of 50-50 because it just completed a bearish move. And you trying to look for a setup now would be very risky. Then going back to the 1 hour, you can see that this is still like the major key level. This is still the major key level that I expect price to actually react from. So instead of wasting time trying to force a trade around here that is 50-50, I'd rather wait and see how the market reacts here. So if I get the CISD here, I'll now pick my entries from there because this is more valid. on the higher time frame, you can see it is a more valid level to look for trades than here. If you look at, you see, the more I expand the time frame, the more you see that this level might not hold. And this is a 4 hours FVG that it might eventually fill also. So many factors to consider that this place might not hold. Do you understand? So let's see how the market goes. So I'll be looking at this and this, but this is where I would channel more energy towards and see how the markets react then. And overall, if you see a buy here, then all fine and good. But if it breaks here, then I know that this is where it's coming from. So I'll just find my sell towards this level here. So that is the plan for this week on this pair. So no clear setup on that. Then for GJ on the daily, clearly bullish, clearly reacted from here. So what it means is that it might continue buying in order to break this high, which is normally the natural thing to look for. Then if you go to the 4 hours, you start looking at it. How do I possibly enter this market? How do I possibly join this trend to get to this target? Because it has reacted multiple times. Let's see our 1 hour. It has reacted here. This is where you have probably picked your entry from, directly above that MVG, and the SL would have been here. And this is what you should have had. And it has been tested multiple times. So normally this is the setup. This is the setup. There's nothing else to look for. If you go to your 30 minutes, still the same thing you can see. That is why it is reacting from there. So that's the setup. There's nothing else to look at here except you are looking further, into this area here. And that's if at all it is broken. That is why I'll be looking forward to a buy. And looking for a buy means I would have to wait for a reaction too. So if at all I want to like look for a buy, this is where I'll be looking for it, for a long-term buy. For a long-term buy, if peradventure this gets broken, but I still feel like it will most likely continue from here. This would have much later. But if it breaks, if this hits SL and it sweeps this, just know that it's coming to sweep all of this liquidity here into this daily key level, and we'll see how it goes from there. Get the CISD and you bounce. Then for GBP USD, on the daily, this is still where I'm looking at for a buy, a possible buy, because it's still bullish. It's still basically bullish. You can clearly see it. It's still bullish. So supposed to start selling from this daily CISD before it's reacted. And all of it shows that the market is still kind of bullish. Now there's an FVG here. And like I said, most of these pairs like filling daily FVGs a lot. You can see filled here. It filled this completely. So I expect it to fill this too. But will it react and go bullish? I don't know yet. But I expect it to fill this. And it will most likely be using this as an inducement. So if I got a CISD on the lower time frame, I might join it and target this as the high or as my external range liquidity. If I can get a reaction here on the lower time frame, maybe 30 minutes, 15 minutes, or even 1 hour. If I get something here, I'll most likely be targeting it, and it should definitely give me at least 3 to like 5 hours. Because if you mark just this alone, self in full, and if you get to CISD, you won't be marking it in full. So marking it in full self is already 3.5 hours. So imagine not marking it in full and after getting confirmation. But looking at this now, I expect it to sell. This is where it's most likely targeting. I don't expect anything to happen around here. So if you're trying to sell, you probably have to like probably join. But I'm not a fan of like joining when I need to wait for clarity. Do you get? So and you have this now. Has already swept this low. You should most likely continue selling. That's already given the signs. Especially if this now closes bearish, then Aluta continue. So if this candle closes bearish now and closes with a full body, then I expect a continuation. They will most likely get it to come back probably around here. Then you target this level here. That's like a 4 hour. That's a 4 hour setup. So if I want to like probably join this setup, I'll most likely be having this. Then this will be my inducement. Because it has filled the FVG, so it will definitely ignore this remaining FVG into this level here and just give it a little bit of space, and that is that. So this looks more likely. Let me delete this so it won't confuse you for now. So this looks more likely. It looks more likely to happen. Looks more likely to happen. So let's see. It's definitely bearish. So it's something I'll risk my money on. It's something I'll risk my money on. Technically, it's something I'll risk my money on. So let's see what happened. Let's see what happened. It's a 3.68 trade. I'll definitely share this to the community. So it's not something certain over there. It's something worth taking. Something worth taking. Something worth taking. So let's see. Let's see how this goes. Once this closes, this is what I'll use as my confirmation. Once this closes with a bearish body, full bearish candle, then I expect it to come back into this level and reject. And this is the 1 hour time frame. So I expect it to like work out fine. Then the next pair is USD card. So this one is, we've had this since last week. And it's giving that bullish vibe. So let's see how this goes. Let's see how this goes. That swept into the daily order block. And this is a daily demand. It's within a daily key level. And this was a full body close here too. So everything is in alignment here. Everything is in alignment. So let's see how this goes. This looks good so far, especially with this rejection here. It looks good. It looks good. So let's see. Barring any unforeseen circumstances, I expect it to continue. Now let's look at the fundamentals that we have for the week. Let me share the screen for fundamentals. Just a minute. Let me pause sharing. Okay, just a minute. Let me share. All right. So let's look at the fundamentals you have for the week. All right. So Monday, which is today, there's literally no major. If there's GBP bank holiday, JPY, so there won't be volume like that. If JPY bank holiday, Chinese bank holiday, Great Britain bank holiday, so there won't really be much movement in the market. I don't expect any explosive or sharp movements in the market today. Then tomorrow we have high impact news on AUD. If you are trading major AUD pairs, be very careful. Then we have job opening. It's also a major news. Talks about the job openings in US. Let's see how that goes. Then NZD, we are not really trading that, so don't have business with that. On Wednesday, there's no major high impact news also. But there's ADP, non-farm employment change. This is also a major news. So it'll have some minor effects on the market. Then Thursday, unemployment claim. We already know how that usually goes. But where Friday is the main thing, where we are going to be having NFP. So there's NFP this week. So be very careful if you are trying to scalp or day trade on Friday. Be very careful to avoid stories that touch. So that's basically it. I don't really have enough time to go through a lot of pairs this week, but I promise that next week we'll go through a lot of pairs, especially the pairs that I looked at in the weekly markets review. Because this week is going to be a very busy week for me, and I won't have enough time to go through multiple pairs. The pairs I looked at are like the major pairs I'll be looking at for this week. So that'll be all for now. Enjoy the rest of your day.
So don't forget to go back to your chart, trade reasonably, trade wisely, and always apply proper risk management on every trade. And remember, no be your papa get market, oh, no be your papa get market. I'll see you same time next week.